Hello and welcome to another episode of Next Level Thursday. I am your host, Brian Hamrick, and I am here with my insurance broker, Mike Murphy from Brouwers Insurance Agency. Mike, thanks for joining us today.
Hey, thanks, Brian. Pleasure to be with you.
So guess what we're going to talk about today? Insurance. What is going on in the insurance market right now? I mean, it's crazy. And before I ask you what is going on, I want to share two quick anecdotes. One is from my network. I know a number of investors who own apartments in Texas. And I was hearing horror stories earlier this year about how their insurance costs were skyrocketing from like $250 per door to $1,500 per door. And I thought to myself at the time, thank God I'm not investing in Texas. I'm investing in Michigan, where it's more of a climate haven. We don't have all of the weather problems they've been having in Texas that are driving up insurance rates. But then on one of my properties, Mike, and this is one that you were working on with me, we went from an insurance policy on a 37 unit that was under $8,000 a year. And that provider basically pulled out of the market. And the next best quote we were able to find was around $23,000 a year. That more than doubled, almost tripled the cost of insurance on that property. Luckily, we were able to find a less expensive quote, but that kind of tees you up there, Mike. I mean, what is going on with insurance in this country right now?
Well, two things. One, we're in what's called a hard market. You have inflation everywhere, as that's the buzzword, inflation, but it does affect everything you buy, including insurance. Everything we pay for on a claims basis is affected by that, meaning the cost of labor, the cost of materials, the time frame to get a claim paid out. Everything's gone up. So over the last few years, we're now seeing it come through in the form of rate hikes with these companies who are trying to get their loss ratios in line. When it comes specific to rental properties, you see companies pull out of the market, like you mentioned just a second ago, Brian. Carriers sometimes are looking at ways to trim the fat, so to speak, and they're looking at ways of getting out of certain loss leaders or categories of business. Apartments are right on that list. You were mentioning Texas, and people have the same issues in Florida, those coastal states who are really affected by weather and catastrophic type events, hurricanes and windstorms. Carriers down there are pulling out altogether, which breeds to less competition, higher rates, higher costs. Here in Michigan, it's extremely weather motivated, but class of business, you're seeing carriers not wanting to write apartments or condos or habitational type classes altogether. You're seeing companies update their guidelines where they really don't have that appetite for older properties, 1960, 1970, 1980. They want to go, 40 years and newer. They want to make sure you have all of your updates in the last 10 to 15 years on every major system, plumbing, heating, electric, etc., roofs. It's really tightened the belt on people like myself being able to offer a wider range of products to clients and investors. So it's difficult. We do have solutions, but inevitably costs are significantly higher.
Yeah, what are you seeing out there with your clients? I mean, are you seeing this across the board? Everyone's insurance is going up, or is it just specific types of properties in specific locations?
They're all going up. Personal home and auto are going up. Commercial property rates are definitely going up. When you get into the habitational market, that's your apartments, 1 to 4 family homes, condo association type risks. Those are either being rewritten to different programs, meaning a company's pulled out and we got to rewrite it to a different program or another carrier, or the company appetite on their existing book of business is being highly scrutinized. The best advice I'm going to give to an investor or a current client is make sure you're communicating with your agent major updates to the property, because that gives your agent a leg to stand on when the renewal comes around and the company either A, looking at rate changes, or B, looking at renewing the product altogether or the policy altogether, making sure that we have documented roof updates, electrical, HVAC, all that stuff really helps communicate to the carrier that you're serious about making sure you have a good product or a good apartment or a good account for that company to renew you in the future. Does that make sense?
Yeah, that makes great sense. It used to be that you could pro forma when you're looking at a property to acquire, and you were kind of pro forming $250 to $350 a door for insurance per year. What should people be pro forma-ing at now?
I don't look at it per door. I've always looked at a cost per square foot to rebuild is kind of how I calculated it. I don't know, Brian, you and I worked together for 10 to 12 years ish.
Yeah.
Well, back when we first started working together on an apartment, you might say the replacement value per square foot on an apartment, average standard apartment might have been 100 to 125 a square foot. That number is closer to 200 a foot on the bottom end. It goes up from there, but I mean, it's the labor and the materials cost to be able to rebuild that square footage. So you and I have gone through multiple different investments, and we've spoken to property management companies and together about raising limits on buildings, making sure that everything's going up and keeping up with the costs in the market. So it's not only just rates, but it's also individual buildings to make sure that you're insured to value so you don't end up with any penalties at lost time.
And it bears saying that the insurance that you've put on my properties is replacement cost insurance, as opposed to actual cash value insurance.
You've been listening, Brian. I'm proud of you.
I've been listening to it for the past 12 years. So I do what you tell me to, Mike.
Replacement cost is new for old in the event of a claim, less your deductible. Actual cash value is you take the replacement cost of property, any depreciation out, and then there's your actual cash value settlement, kind of like a car. What is this worth today at the time of the claim? I don't recommend actual cash value unless you're really tight on budget, because you're never going to be happy at claim time. I should say never. Very rarely are you happy at claim time. Replacement cost or agreed value is really the way to go.
It's already starting to happen. I'm seeing people complaining about this on Facebook, on LinkedIn, about their insurance going up on their rental property. When that happens, what are the remedies? What can they do?
Number one, higher deductibles. Take a little bit more risk. People that are having properties professionally managed, you have access to your contractor, your property manager, and you're looking at the long-term health of your policy and your account. Bump your deductible up maybe from $2,500 to $5,000 or even $10,000 if you can afford to take the risk, because long-term you're going to keep your premium level or lower it down, and self-insure a little bit, keep the money in your pocket and set aside that money in case you do have a major issue. But over the course of 3 to 5 years, you're probably going to be ahead.
What else would you advise?
Like I'll restate updates. Hey, if you've put money back into your property, sing that from the rooftop. Hey, I put a brand new roof on this place. We just upgraded all of our electrical service. We have brand new plumbing. We have the property professionally managed. Here's what we're doing on a regular basis. We have on-site management. We might have security. Anything that you've done to enhance your property, communicate with your insurance company because they're going to reward you for that.
You just remind me, we got to talk about the 12 unit because I just upgraded all of our plumbing. We just redid all the plumbing at Lafayette.
It's great to have that information on file. It really is, because number one, it shows the company that you care, which most investors do care. But there are a lot of bad apples out there that just want to get by with the bare minimum. And those are the people that are in your risk pool that are lost leaders and can spoil it for the whole bunch, so to speak.
And I'll give you one tip that I don't know if I'm crazy doing this or not, but I rarely will file an insurance claim. If something happens, I'll pay out of pocket before I file an insurance claim. And Mike, I think that does help me when it comes to time for renewal, or if I have to switch policies and they want to see what kind of losses I've had claims against. I do believe it helps me to really say, well, I haven't filed any claims.
Absolutely. You and I have probably 2 to 3 instances over the last decade where it's cost a little bit of money to just bite the bullet and take care of it. But the long-term health of that building is paid you back many times over because you've kept things in line versus getting a $10,000 check here or a $15,000 check there. You've just been eating those costs, but over a long 10-year period, you're way ahead.
It's good to hear you confirm that. So Mike, you're an insurance broker, which means you don't just go to one insurance company. You have multiple insurance company providers that you can bring clients to. Go ahead and just take 20 seconds to tell our listeners how they can get a hold of you and how you might be able to help them.
I specialize in working with apartments, 1 to 4 family, single family homes to 4 family homes, condo associations. We have 9 different companies we represent. So the markets and the appetites vary, but we have choices and options for our clients. I really like to get involved with the property management companies and the investors, get out and take a look at the properties in Grand Rapids and get active with it so we know what we're insuring and we're doing the best for you. If you need to reach me, it'd be Mike M at Brouwers, Brouwers agency.com. And our phone number is 616-891-0123. Happy to talk to anybody.
And are you Michigan exclusively, or do you go outside of Michigan?
For what we're talking about, I'd stick in Michigan.
Okay. Well, Mike, thanks for coming on the Next Level Thursday, sharing your insight into insurance. It sure is impacting profitability. It's something that investors need to be aware of and factor in, because it is an additional cost that just keeps going up. And hopefully we've kind of seen the topping, but you never know.
I think 2024 is going to mirror what we saw in 23. Honestly, that's what we're hearing. So I would say hold tight into 24 with the strategies we discussed, because I think more is coming.
Survive till 25. Thank you, Mike. It's been a pleasure talking with you.
Thanks, Brian. Appreciate it.